All right, we are going to go ahead and get started. Good afternoon, everyone. Thank you so much for coming to the NPERS Employer Reporting Workshop. My name is Rachel Stallworth. I am one of the training specialists here at NPERS. With me today, as you can see in your corner or in your boxes, is Sammy Speaker and Jane Warren from our accounting department. We have Cassie Snyder and Sophia Dunsmore from our auditing team, and Jeremy Calcara is here. He's our other training specialist. I do want to start off with a bit of housekeeping for our meeting here. First of all, you'll probably notice your mics are muted and your cameras aren't on. So this isn't because we don't want to see those beautiful faces, I promise. It is simply because it's to keep everything running smoothly so that the feed doesn't get slowed down with many cameras and microphones on. So there's nothing wrong with your system. Don't worry about that. This is just the way that we have it set up. Next, everyone should have received our presentation materials in an email leading up to this event. These documents are going to allow you to follow along with our presentation today. We're going to be referencing those materials quite often, so make sure you have those available to you. You also should have had the opportunity to pop up to open those documents when you logged on today. If you don't have the email and didn't open the documents, we've put a link to where you can find these documents online in the chat. This is going to have all the information that we give you during the presentation in there. You can follow along with us in there today, as we'll refer to it pretty often. Speaking of materials, Jeremy is so kind as to be putting the materials in the chat box when we do mention them throughout the presentation. So keep an eye in the chat box there for those materials. And we'll try to remember to mention that throughout as well. So let's talk about question and answer time, so Q&A. We know that a lot, if not all of you, came to this event today with questions about either the accounting or the auditing side of the things that we do here at NPERS, or maybe even both. And we welcome that. And we're going to allow a lot of time today for us to answer those questions, hopefully for you. But I do want to temper some expectations. Sometimes I don't know is going to be our answer here today. Many times the answer is going to be depends, because facts and circumstances matter with abnormal situations, and many times these situations are abnormal. So it's not us dodging your question or trying to avoid answering something that might be confusing. That's us not wanting to give you bad or incomplete information, and it doesn't have to be the end of the conversation. We have our contact information on your materials there. So if our answer is, well, it depends, then feel free to shoot whomever you are talking to an email, giving us the facts and circumstances to help clarify the conversation. If our answer is, I don't know, I spent enough time with everyone on our team, even though that time has only been a month so far, to know that we want to know the I don't know answer. So we may ask for your contact information so that we can find out and let you know the answer. Speaking of questions and answers, you should see two different panels on the right-hand side of our presentation, one called Chat and one called Q&A. If you have questions, we'd ask you to please put them in the Q&A panel and not the chat panel. We'd like to keep the chat panel clear for us to post links to resources, and the Q&A panel allows us to keep track of which questions we've already addressed. So if you do not see a Q&A panel, click on the button with the 3 dots in the bottom right-hand side of the window, and you'll see an option to open the Q&A panel. So again, if you don't see the Q&A panel, there's an option with 3 dots. It should say more or just 3 dots, and that's in the bottom right-hand side of the window. Our team is going to be monitoring the Q&A panel during the presentation. So if you have any questions as we're going along, just send them into the Q&A panel and we will get back to you. Okay, now if I had a nickel for every time I said Q&A panel during that last few sentences, I wouldn't have to worry about retirement. Okay, so here's our agenda for the day. I'm going to talk to you about a few things here to start off. Then I'm going to let Cassie take over to talk about the auditing side of it all. Then you'll get a break, and when we come back, I'm going to briefly talk about some website and employer manual updates before handing it off to Sammy in accounting. Overall, we're only planning on speaking for about 90 minutes of our 3 hours that we have here today, and the rest of the time will be reserved for you to talk to our auditor and accountant with your questions in the Q&A spot. And Jeremy and I and all of the other people on this call will be there to answer your questions as well. Okay, so let's talk about the employer reporting in general here for a minute. I want you to know that we know that you all have an incredibly important job as employer reporting agents. These defined benefit plans that our schools have, where your account balance doesn't matter, are going the way of the dodo. Yet here in Nebraska, we have this plan that is not only surviving, but it is thriving for our members, and that is amazing. But because that account balance doesn't matter, the plan can only thrive insofar as the information we get from you is accurate. Because that account balance doesn't matter, correct reporting of service time and salary is huge. And obviously, that's where you guys come in. When the information that we get from you is accurate and comprehensive, it ensures proper benefit calculations, it minimizes audit points, decreases that follow-up work between us, and prevents a delay in benefit payments, which is better for everybody. Let me give you an example of something we're seeing a lot. Okay, so you probably already read this in our audit newsletter that we sent out. I know you did. But quite often, we're seeing reports entered with incorrect Social Security numbers for members on them. When that happens, our system creates an entirely new account for that member, creating a situation where there are multiple accounts for the same member. This creates a lot of extra work for our team as well as yours, because we then have to collect documentation from you about the error to be able to delete duplicate accounts. So like I said, that's just one little example of how important accuracy is. And I'm sure you're going to hear a few other examples from the rest of the team today. They're going to go over some with you as well. Okay, so legislation. So employer reporting. At NPERS, we rely on you for correct information so that we can properly calculate benefits. And believe me, we know that this isn't easy. You guys have a hard job. We know that this information that we ask for may be something that you have to dig for, and I'm sure that can be a hassle, especially when you're possibly having to dig through records that predate your time as a reporting agent to get us the information that we need. Please know, we do not ask for this information to be annoying. I know it may seem that way sometimes, but we don't. We don't just sit up in our offices trying to figure out ways to make life harder for our members, even if it may seem that way sometimes. When we ask for accurate information, we're asking because it's important, because accuracy matters. A half an hour of time here or there can change an employee's entire classification. It can be the difference between a full year of service credit or partial service credit. So when you hear us say things like, all employees must have their hours tracked every time they render service, at the time they render service, it's not because we're just checking needless boxes. It's because it matters to our members, so it matters to us. Now I'm going to talk a little bit about legislation. There are two bills we wanted to discuss. The recent change to the Uniformed Services, The recent change to Uniformed Services Employment and Reemployment Rights Act, or USERRA, that affects employers and employee reporting agents is an adjustment to how contributions are made when an employee who is in the military is called into active duty. So previously, as you know, when this situation came up, employers would just make contributions to the plan on behalf of the school and the employee for the time that was missed for the federal service provided. They reemployed with their pre-military employer and filled out the requisite paperwork. Now, with the recent change, employers will also make both the employer and the employee contributions to the plan, again, provided they're reemployed with their pre-military employer and fill out the requisite paperwork, when the member is called into active state service. And we have updated our military guidebook to reflect these changes, which I know my friend Jeremy put in the chat. Another change that was made that affects our plans was an updating of the verbiage regarding required minimum distributions, or RMDs, to bring state statute into line with the recent changes to RMD ages brought about by the Secure 2.0 Act. So with these recent changes, there are now different ages at which these distributions are required based on the year you were born. So it gets pretty nitpicky. So for our members born prior to July 1st, 1949, their RMD age remains unchanged at 70 and a half. Members born on or after July 1st, 1949, but before January 1st, 1951, have an RMD age of 72. And then finally, anyone born on or after January 1st, 1951, now has an RMD age of 73. We have a document that we keep updated with these changes that helps employees and employers understand RMDs and how they can affect their benefit. That can also be found on our website. The last change from LB 103 we wanted to make you aware of was an update of a previous change in legislation. So back in 2022, when LB 700 was drafted, there was a category of employees who work for the state are required to hold their certificate for their position and are participating in the school plan, but are not covered by the State Code Agency Teacher Association, or SCATA, labor contract. LB 700 did not specifically cover this group, but LB 103 adds this category to the new into the law, codifying the rules regarding working for the state following retirement from the school plan. So those are the three things that LB 103 did. And then we have LB 378. So we've also had many questions about immigration status and eligibility for plan participation, particularly regarding the definition of qualified alien. So we wanted to take a moment to address that as well. We actually sought out a Nebraska Attorney General's opinion regarding this matter, and the opinion agreed that the law was not as clear as desired and recommended a change in the law. In addition to outlining a current multi-part test that NPERS must currently engage in to determine eligibility based on immigration status, NPERS members and reporting agents wanted easier rules and processes to implement. Thus, NPERS proposed LB 378, which lists the documents that members must provide their employers to demonstrate lawful presence in the U.S. LB 378 provisions were incorporated into LB 198 via Amendment 1391, which is currently on general file for the next legislative session. Okay, so that is all I have from me for now. So I'm going to go ahead and pass it over to Cassie. She's one of our auditors here at NPERS. I'm going to stop sharing my screen so that she has the opportunity to share hers. She can go ahead and do it at her leisurely speed that she likes. And here is Cassie.
Good afternoon, everyone. So my name is Cassie Snyder, and I've been at NPERS as an auditor for just over a year, actually probably pretty close to a year and a half. And before I get going, I'm just going to say that I'm not a natural public speaker. And I'm pretty sure that when I get through all the information that I have to present here, this will probably be just the longest time that I've ever spent presenting anything. So just kind of bear with me. My manager, Vanessa Holen, has been the one speaking at these, and luckily I've been at a few of the employer workshops. So I've heard that what she's been saying. So hopefully we can just go ahead and keep giving you guys a consistent message. So I think one of our biggest goals across our whole audit team and across our agency is having a consistent message. And we want to know that when we're looking at your school, you know, we're just trying to work and give every single school a consistent message. So, okay. So just moving on, we want our audit team to be a point of contact if you need us to be. So you should always utilize the employer reporting contacts. You can always contact Jane, but we know that there are some cases that are just a lot more complicated. So if you have any in-depth question, you should never hesitate to reach out to us. Just be warned though, you might have an answer that, you know, gives you 20 more questions to answer. But if you reach out to us, we'd be able to document your situation and give you a determination. But we would also make sure that we record it in your organization's file and note any employees so that we have all that documented on our end as well. So with our audits, we've been trying to make them educational, and there are 266 school plan employers and not very many of us. So we've determined that the best way to make sure that we're all on the same page is not only through our audits, but through like education provided to all the employers. So first off, why am I being audited? So we know that your plan is hard. And even though we have about 40 hours a week to dedicate to understanding our retirement plans, it's still hard for us to navigate the rules. So we have the advantage of focusing only on retirement, and that we know for you, that's a very small part of what you do. So overall, we're a team, and we hope that our audits are educational and that you are able to get something out of them. And we just want to thank all of you reporting agents from the schools. You do some incredible work to make sure that everything is reported correctly. This retirement plan is probably the best plan in the state, and you're really lucky to have it. So the school plan is a definitely determinable benefit with a multiple employer plan. So basically what that means is that any benefits that are provided to the members have to come from the plan document, and it has to be applied across all employers. And this can't be up to the individual's employer's discretion. So for retirement purposes, all the schools have to follow the same rules, and the people of similar circumstances have to be treated the same across all employers. So that's why the consistent messaging is very important to us. And depending on what details you provide to us, you should be getting the same answer, whether you call into our call center or whether you speak to our team. So let's move on. Statute expectations. Per state statute, NPERS is required to audit all schools to verify compliance with the plan requirements. I think it's noteworthy that you understand that NPERS is required to do this and not something that we're just taking on. We do have that statutory obligation. And then also, you know, we know that you guys don't like being audited, and we get audited 3 times a year by the Auditor of Public Accounts, the APA. And the school plan gets audited just once a year. But when they audit us, they're looking for the same things from the school plan employers. So basically they're just making sure that the contributions coming in are correct and that people are enrolled or supposed to be in the plan. So I don't know if you've had this experience, but they will request information from schools to see if the schools are reporting and establishing eligibility correctly. And then when they find something, they'll come and come back to us and tell us, you know, their findings from the school plan employers. And they actually provide these as audit points to us and say that these are like findings for our agency. So basically they want us to make sure that all 266 employers are correctly reporting. So in a way, any finding for your audits that we conduct are also kind of findings for ourselves. And that's why we care so much that the employers are doing reporting, or that the employers are reporting things correctly, and then also making correct determinations for eligibility purposes. And then our board also, you know, on the PowerPoint, they're referred to as the PERB, but they are the Public Employees Retirement Board, and they're also expecting us to be auditing school plan employers and helping you accurately report for retirement. So we have tried to change the way that our school audits are done. It's about 8.5 years between our school audits. And since there are 266 employers and just a couple of us, it's not the only plan we audit. So we start with an entrance interview and the initial documentation request. And then it's a bit of a back and forth to investigate any situation that comes up. And then we would schedule an exit interview to go over the report. And we are working on having detailed plans on how to resolve any findings. So the whole point of the audit process is to make sure that the state statutes and the rules and regulations are followed. We need to make sure that all eligible and only eligible employees are enrolled. We have to ensure the right amount of contributions are taken out, and reporting eligible and only eligible compensation. And we also have to make sure that the proper amount of contributions are reported, and to confirm that the employee information, like the demographic information, is accurate. So before I move on, I just kind of want to briefly go over some of the things that the audit team has covered in the past at these employer workshops. The first thing is the reporting of extra duty hours and wages. So this was a big message that we pushed after auditing the COVID year. This was a little bit before my time here, but I just want to hit on this for just a little bit because it's a big example of why we've been trying to say the same things to all school plan employers. So during 2020, all of the schools were shut down kind of around mid-March, and what was happening was that all of the schools were coming up with different solutions for how they were going to be reporting pay for like track coaches, for example. And so we were asking schools, why did you pay all year round for the track coaches? And kind of the majority of the schools have been just paying and reporting over the year. But for the COVID year, you know, since the track season was stopped, some schools were reporting that coaches were rendering service all year, and that's why they got paid all year. Some were reporting that after the shutdown that the track coaches were on call and they didn't know that the shutdown was going to last the rest of the season. So they're also holding out on maybe resuming. And then some schools told us that they did provide service for the entirety of the track season, even though the track season was just one practice. So our bottom level foundational guidance is always going to be to report wages and hours when they are worked. So we want to track when the service is rendered and when the hours are worked. And then last year's big message was about the termination of regular employment. Last year, we were noticing a lot of employees terminating from their regular employment and only providing substitute service. Some schools had these employees provide unlimited substitute service and not contribute. And then some schools had these substitutes stay in the plan. A few years ago, we had a bill passed through the legislature that outlined the amount of days worked after termination. We've been referring to it as by its bill name, LB 147, but we've been trying to shift our language to say termination of regular service. So that bill was passed. It established that after the termination of regular service, employees can only come back to work 8 substitute or volunteer days per calendar month for the 180 days after termination. So that bill had been passed to make things easier for schools to get substitutes, but it also meant that we were just required to test it as well. So in testing, we realized that everybody was doing this differently. As I said before, there were some schools that were keeping substitutes in the plan, and there were some that were not. And many schools let people become substitutes and substitute on an unlimited basis after the termination. And then some schools, some schools reported that as compensation for retirement, and then some schools did not. So we have been telling people not to treat it as termination of employment, but termination of regular service. So if they terminate all of the regular service, then the termination rules apply, and they would need to have a 180-day period with only 8 days of sub or volunteer service in a calendar month. So now I'm just going to sidetrack a little bit here. There is a bill right now in general file in the legislation that will allow for unlimited substitute service after termination, but it has not been passed yet. So we're only going to be concerned with the rules as they stand right now. But if this bill passes, we will need employers to know whether their employees are taking a distribution of their account or not. But we'll keep the school plan employers updated if this passes and what you need to know, going forward. But for the time being, we just want all schools to be aware that when the employees terminate their regular service, they have to follow those termination rules as they stand right now. Okay, so for the workshop this year, we decided to go back to basics. We know that this plan is hard, so how can we make it not such a big, huge part of your job? So just kind of going over eligibility again and who goes in the plan and why. This will just kind of be a walkthrough of all the steps that you should take to determine eligibility. So the first thing we want to touch on are forms. We've heard from a lot of employers lately that they didn't enroll somebody because they didn't get a form back. So if we're in this plan, somebody is either mandatorily eligible or not eligible. So if they are mandatorily eligible, we expect the employer to start submitting contributions right away. And at that time of hire, we have a requirement for the employer to give the employee a beneficiary form and a vesting credit form, but these are not required for our office to have. So the employee only needs to meet eligibility to start contributing to the plan. And so moving on from that, the first question that we'd ask to establish eligibility is this employee 18 years of age or older? And this one's pretty self-explanatory. If they're not yet 18, they would just need to wait until they turn 18 and then go through the rest of the eligibility questions. And then the next question is whether they are eligible based on citizenship status. So right now, if an employee is a US citizen or a permanent resident alien, they'd be eligible to participate. If they're not a US citizen or a permanent resident alien, you would need to contact our office for a review of their eligibility status. Basically, at that point, we would provide you with a secured share file link, and then we would want some documentation. We would preferably want a copy of the employment authorization document or the EAD card, but if that's not possible, we would want a copy of both the passport and the visa. And then basically, yeah, they would go through a legal review process and you would get a determination of whether the employee is eligible to participate or not. And then just moving on, if the employee met the first two requirements for eligibility, then we would need to figure out the job classification for the employee based on the retirement definitions and statute. Every employee must be classified as one of three categories. They would either be temporary, substitute, or regular. And with this, I want to note that we have some pretty strict definitions of what is temporary and what is substitute. So this is pulled from our retirement statutes. Your school or ESU might have other definitions for these employees or different ways to classify employees, but for retirement purposes, they should be classified in three categories. We need to make sure we categorize each employee consistently and correctly to ensure that they receive the correct retirement benefit. So first, we have temporary, and that's defined as hired to do a job for a certain length of time and not to exceed 1 year. And when that job is complete, the employment ends. Temporary employees are not eligible for the plan. We would ask that employers have documentation to show that they are temporary, either something that says that so in their contract or some sort of like employment agreement. If a temporary employee works longer for a year, then the school should reanalyze their status and, it might change their eligibility. So next we have is substitute. Substitute is a temporary employee filling in for a regular employee that is temporarily absent. And this means the definition of substitute is very specific. It has to be for somebody who was hired by the school or ESU as a temporary employee to assume the duties of a regular employee who is temporarily absent. So substitutes are not eligible for the plan, but this definition of substitute is very narrow. It does not mean somebody who is filling in for a vacant position. It also doesn't mean somebody who is contracted by the school to come in on a regular and ongoing basis, maybe like coming in every single day to fill in where they're needed. That would be somebody who's more of a permanent substitute, and they would meet eligibility for the plan. And so from here on out, when we say substitute, we're only referring to these people that fall under this substitute definition. The next category is regular employee. And so a regular employee is hired on an ongoing basis. And if the employee does not fall under the first two categories, then they should be considered a regular employee. As regular employees are the only eligible employees to participate in the plan, it is important to make sure that they are correctly classified upon hire. But we also expect schools to have continual assessment of their classification should their employment change. So if an employee is rendering service in either a substitute or temporary service, they are classified as a regular employee for retirement purposes. So that means if they're hired as a substitute and then they start a regular service, they're no longer a substitute, but a regular employee. And then you'd have to add the substitute hours and wages to their regular hours and wages, and that would be reportable to retirement. Let's move on to the rehire rules. Like some of our biggest audit findings come from the reemployment rules. And I would say that the majority of our school audits have at least one finding where an employee was rehired and didn't correctly restart contributions. And it all comes down to kind of one thing, is whether the employee has taken a distribution of their account. And it also just gets a little complicated with our termination rules. The first question we would ask is, has this employee previously participated in the school plan at your school before? So if they had met eligibility at your school. And let's just say the answer is yes. So the next question would be whether 180 days have passed since their termination. If the answer is no, they continue participating unless they are terminating from all regular service, and then they can only render 8 days of a month of substitute or volunteer service. And then the next question would be, did the employee take a distribution from their NPERS account? And when I say distribution, it doesn't always mean a retirement benefit. It can also mean a refund, so that people who are not retirement age can take refunds of their account. So if the employee took a distribution and had a 180-day break in service, they would come back as a brand new employee and you'd move on to the next steps on determining eligibility. But if they had previously worked at your school and did not take a distribution, they would be eligible upon rehire regardless of the hours worked. And that's kind of a big note too. So for example, let's say that you're rehiring an employee who has previously worked at your school, and let's say that they were previously full-time. They left your district for a few years and they're coming back as part-time regular employees. And you aren't even sure if you're going to work 20 hours a week or not, you know. But your question should be whether they had had a distribution, because if they had met eligibility at your school previously, they would go back in no matter how many hours are worked if they're rehired as a regular employee. Okay, so one question that does come up from employers is how they can be sure that an employee has an account balance or not. And there's just a few solutions. If the employee doesn't know, they can call our call center and they should be able to find out that way. And if you as the employer still have questions over whether somebody has an account balance, you are free to reach out to us. We wouldn't tell you anything confidential, but we would be able to help you determine whether the employee should go back into the plan upon rehire or not. The next step would be determining the hours worked. So if they are brand new, regular employee at your school district, the next step would be to look at their hours and whether kind of determine how much they were going to be working. So if the intention of the hours upon hire is 20 or more a week, it is mandatory for them to enroll immediately upon hire. And it's good to have documentation for the intention of hours to be worked upon hire. And we also know that sometimes you hire people with the intention of working over 20 hours a week, but that doesn't always pan out. So having documentation that shows the anticipation of hours to be worked helps support why they're put in the plan. If the intention is for them to work less than 20 hours a week, then you must monitor all hours worked during each plan year for eligibility. And if they work an average of over 20 or more hours a week in any 3 months of the plan year, they must participate in the plan in the next payroll period. And that's why we say to monitor all hours for all employees. If they're working a regular position, you should be monitoring their hours for eligibility. But we also want the school to be monitoring just all hours in general, because if you have a substitute that starts to pick up regular service, those hours would be added together to establish eligibility. And finally, the calculation. To find the average of hours worked in a calendar week, we would take the total amount of hours worked in a month, divide that number by the days in the month, and then multiply by the 7 days of the week. So that formula is what we use when we analyze hours for audits. And we do have a tool for this, and I'll get to it in the next few slides. All right, so just kind of a quick rundown of our eligibility tools. I'll go ahead and pull up our website too in just a second. Briefly, I'll just kind of touch on the manual. That's a really important tool. We always reference it. You know, if I have any questions, I'm sure employer reporting references it too. We have this employer cheat sheet, and I know that came with the newsletter that was just sent out a week or so ago. And it's also in this packet. And then we also have the retirement plan eligibility calculator. I'm going to click on that and it's going to take us to the website. So basically, these are all the questions that I just went over. And so you can click, you know, yes or no, and it takes you through all the answers. And it should pop up that whether somebody is eligible or not. And so you would just go ahead and go through the questions for each, you know, situation. And then we also have the calculator tool for monitoring hours. Let's see, I'm just going to go ahead and go through. So monitoring hours for the eligibility. So we have this calculator tool. It's on our website. It's an Excel document, and you can go ahead and input those hours worked per month, and it'll let you know whether it's a qualifying month. And then once you have 3 qualifying months in the year, it'll prompt you and it says the employee must be enrolled in the plan in the next pay period. And then there's the cheat sheet that I talked about. It is in your packet, but it's also in the newsletter. And I guess really quickly, yeah, so to find all of these tools, you would go to our website, and then you would click on employer reports, go to Nebraska schools, and then you'd scroll all the way down. And so there's the retirement plan eligibility calculator, the step-by-steps, there's the manual, there's a whole bunch of other, you know, informational sheets. And here's the school termination of employment employer cheat sheet. I believe a little bit higher in this page is the calculator tool. It's got its own little section here. And you go ahead and click on it here. And we've also got like sample substitute logs and extra duty logs if you were, you know, if your school needs those, or, you know, just kind of want to reference and see like what we would, we're kind of asking you to do for logging substitute and extra duty work. So I guess with this, I believe I'm through all the material that I have for you today. So thank you so much.
All right, we're going to get started. There are a few things I just wanted to review before we move on to the accounting side of things. Just to go over a little bit what Cassie went over. If you go to our website, NPERS.ne.gov, if you hover if you hover over where it says employer reports on the top right hand corner of the page, click Nebraska schools and scroll to the bottom, you'll find all the tools and informative paperwork we're going over today. So to reiterate, some of the information that was changed with the recent change to USERRA or USERRA, employers will also make both the employer and the employee contributions to the plan, again, provided they are reemployed with their pre-military employer and fill out the requisite paperwork when the member is called into active state service. And again, we have updated our military guidebook to reflect these changes. Again, with the recent changes to LB 103, there are now different ages at which these distributions are required based on what year you were born. So the RMD age remains unchanged at 70 and a half for people born for members born prior to July 1st, 1949, members born on or after July 1st, 1949, but before January 1st, 1951, have an RMD age of 72, and anyone born on or after January 1st, 1951 has an RMD age of 73. And we have a document that we keep updated to show these changes on our website as well. And with Cassie, we went over that eligibility cheat sheet. Again, the cheat sheet is a great tool to see if an employee is eligible to contribute to the plan. On our website, this form is actually called the School Termination of Employment Employer Cheat Sheet PDF for anyone who is really eager to use it. I know there are some of you out there. And lastly, I just wanted to mention that we had a couple of recent manual updates. We did get a lot of feedback from you guys last year about how having some of the scenarios on the back of the old paper non-cons was really helpful. So we did include them this time around. We also included definitions that are likely going to be helpful to you as well. So we just did want to mention those manual updates. So now I'm going to go ahead and hand it over to Sammy Speaker. She is going to give you information from the accounting side. So I'm going to stop sharing my screen and she is going to take over in just a moment.
Hello. I will start off by going over again. The manual is your best resource. Anytime you gonna call me or Jane, we're gonna check there first because we're not encyclopedic. We don't know everything right off the bat, so we'll check there first. You can save some time by checking it. It's very helpful. It will give you information on how to determine eligibility, what compensation is should be reported or not. And it gives you like nice step-by-step instructions for several different forms you have to fill out, like non-cons, how to do the monthly school reporting report. It's just a very good tool. Would recommend it. For every new member that you will have entered into your school, you are required to give them an informational packet. The packet includes the school plan member handbook, the beneficiary form, and the application for vesting credit. As said previously, those are not required to get returned to us. It is just a very good idea. On the members side, the beneficiary form is obviously, it tells us where they want their money to go if they would unfortunately decease early. That form, when getting submitted to us, must be physically mailed in. It must be original copy. An emailed copy will not be valid. It has to be a physical mailed in copy of that beneficiary form. The application of vesting credit, that one can be emailed in, that can be a copy, but it must be submitted within 180 days of employment to be valid. Going over eligibility, what counts as eligible. These are just going to be some specific scenarios because Cassie already went over general idea of what is eligible. They must be 18 years or older. They must, when hiring them, it's the intention to render regular and ongoing service with an average of 20 hours a week for 3 or more calendar months. Those can be any 3 calendar months. They don't have to be consecutive. And if you have a temporary employee that works over 1 year, they are no longer temporary and they must be entered in the plan if they work over those 20 hours a week. Any re-employed members who have not taken distribution should be re-enrolled right back into the plan. Doesn't matter how many hours they work if they are continuing regular service. If they have received a benefit or a refund, then you start back at the beginning. They must determine eligibility over again. Instances where the employees who are not eligible, if they're under 18, temporary or true substitutes. Any temporary residents of the US that don't have the green card, don't have the required paperwork, don't enter them in. For those questions on that, email us because yeah, it's very complicated. We would have to go research that if for any oddball questions on that. If someone is intended to work less than 20 hours a week, they are not eligible. Do keep track of their hours though, because once they do hit that the 20 hours a week for those 3 calendar months, they must get enrolled the next pay period. What compensation should be reported to NPERS? That would be your gross wages and salaries. So that's like overtime counts, cash or comp time, back wages, salaries, contributions that are made to like cafeteria plans, that sort of stuff should be reported. What should not be reported is unused sick or vacation time. Used sick and vacation time should be reported. I guess I didn't have that on my last one. Insurance premiums converted to cash should not be reported. Any sort of fringe benefits, such as uniforms, cell phones, reimbursements, that kind of things, bonuses, workers' comp, disability, any jury duty. Basically, in short, any compensation that can be manipulated by the employee. Service credit is what hours get reported to NPERS. That would be any day that they are working, used sick or vacation hours, any donated pay, just any sort of leave days that the employee gets paid regular wages. Do not count unpaid leave. Unpaid leave is not counted towards the hours that should be reported to us. And that will include FMLA or maternity, which I believe is my next slide. These should not get reported if it is unpaid. Anytime you get a case where you have someone who's on maternity or FMLA with unpaid leave of absence, you need to make sure that, I'm going to skip through these next ones because it'll go over it here. We need to make sure that when they are gone and on those unpaid leaves, they have to have 0 hours and 0 wages reported for that time. The reason for that is so that because they have that those employees, they are able to buy back that time that they were gone, and we need to make sure that our records show that. This is complicated for several reasons because all of you have different kind of payroll systems. So if you have questions on how to do that, please reach out. Just make sure that we get the records showing that, and you can do adjustments to help fix that if it is done previously. And that segues into the adjustments here. Adjustments is like if you have a error on your previous report or need to go back and fix some things, hours are different. You can do an adjustment. Those can be submitted in with your monthly reports. And for how to do that, we have a nice step-by-step guide in the manual. We will need an adjustment form. Every time you do an adjustment, it tells us what you were doing and why you were doing it. And you can send this in ahead of time or as you send in the report, just so we have proof on what you're doing. And I will quickly go through that at the end, because I'll flip over to the website to show you where you can find some forms, and I'll show you where to find this adjustment form and go through it. But I will do that in a little bit. Name changes, if you have an employee that is getting a name change, make sure you receive documentation such as their social security card that is confirmed that they did indeed get a new name. Don't change it in your system before you have that proof, legal proof that they did change their names. Do not use nicknames because it shows up, anything that you have in your system shows up on ours. It gets overwritten every time. So it'll be a flag for us. It'll be a flag for us anytime you change a name. So to save time, just don't change the names very often. And when you have someone who does change a name, make sure you provide a copy of the social security card so we have that on file. The wages and contribution report, it is due every month on the 10th of each month. It needs to be confirmed by the due date as well. If it is not so, you're going to get a late penalty, and it's laid out right there on the slide for you. If you know you are not going to get it done in time, just reach out, let us know. Unforeseen circumstances happen, just give us a heads up, because then the fee can probably get waived for you. Any flags or errors in the report after validating and before confirming the report, please check for flags. It is where you can find that is right there on the slide. And it will check over the flags, fix any errors, and it will make the process a lot faster. Here are your most common flags that you're going to be getting. Hours reported exceed the defined upper limits. So any member that is over 300 hours is going to get flagged. Give us a reason why in the comment box. 300 hours is a lot. I think I did the math, and that is working 6 days a week at 11 hours is the minimum to hit 300 hours. So just double check the hours on those people that do exceed the 300 hours. And then if you have the reason, put it down in the comment box. Hours reported is 0. That's any member who has 0 hours is gonna get flagged. Just give us a reason why in the comment box. If you provide maternity as a reason why, you are going to get an email with these questions. That is for us to make sure that, as I said earlier, those maternity people and the FMLA, make sure that they are able, their hours and salary get tracked correctly, so that we can make sure that they can buy back their service later, if they so choose to do so. Other flags is contribution amount does not match the percentage rate of salary defined by the state. So that's when your contributions do not match the correct percentage that is defined by statute. So that is, math is not correct. The member's contribution is not this 978% and the employer's is 101. If that is not the case, you need to go back and change that, because that is one of the flags that will suspend your report. So just go back and fix that. Hire date must be within 1 month pay period of begin date. So that's when there is 1 month difference between the hire date and when they started making contributions. The most common reason for that is when they've worked part-time, so little hours that they didn't need to contribute to the plan before, and now they are. The way to fix that is you need to change the hire date on the report to when they began contributions, and then leave us a note in the comment section why there's a difference and what changes you've made. The employer reported termination date is different from the termination date in the system. So that is when your non-con that you submitted for that member and the termination date on that non-con that you submitted and the termination date on the report are different. And the way to fix that is to either go back and fix the non-con, or fix the non-con's date, or fix the report's date so that they are matching, and then leave us a note saying that you addressed that flag. So the termination date for the members, if they are hourly employees, the termination date should be the last day they are physically at work or the last day of used sick or vacation time. For contracted employees, that'll be the last day, the day their contract ends, or if they terminated early or resigned, the termination date will be the day of that resignation or termination. Non-contributing member form must be submitted for every employee who is going to be no longer contributing or has an extended leave of absence. The submission is done online through the reporting portal. Each school must have a non-con agent who is able and have permission to submit them. And we require a form to be sent to us for any time you have anyone in your payroll who is either going to get that permission to be able to submit the non-cons, or anybody who is leaving. So like anyone who's retired or joining your office who needs those powers, you need to submit a form to tell us, because there's no report for us. We don't know when you change employees. So we need that form to tell us who has permission to submit payroll and non-cons. And I will go over where to find that form once I show off the website. This is our website, and you'll go over to Employer Reports, Nebraska Schools. It'll be down here at the bottom. It'll be under Forms, all the way down to the bottom again. School Plan Forms. And this is where you can find these forms, the beneficiary ones there. There's that reporting agent form to let us know when you have a staff change of like the payroll for non-con agents. There's the application for vesting credit, and then there's your adjustment form to fill out when you need to do an adjustment. And I believe I am done.
So that concludes what we have for today for Speaking Wise. Now we have time for Q&A. So I wanted to take a moment to pause and thank you all for coming today. We're going to stick around for as long as we need to answer questions. So those of you who have questions, please feel free to stick around. Otherwise, that is all that we have for you Speaking Wise. So have a great rest of your day. We will be reading the questions out loud, and I will let you know who we are going to send the question over to get it to be answered.
And we did just want to one more time go over the website and let Sophia and Cassie had one more thing I believe they wanted to share there with the website. So I'm going to let them share their screen one last time. But again, if you have your questions, go ahead and get those in there now. We're going to stick around here and answer them as long as they're coming in. But I'll turn it over to you, Cassie and Sophia.
I guess Sophia had a question again about where that monitoring hours calculator is. So let me just get my screen shared really quick. Here's the homepage for our website. You would go down to the employer reports tab and go all the way down to Nebraska schools. And then somewhere kind of in the middle of all of this is the calculator tool, monitoring hours worked for eligibility. And you would access it by clicking here. It downloads as an Excel file. I'll open it up. I think I just kind of blew by and just showed you that on the PowerPoint before. But yeah, you can input any hours that employees work. And then it should kind of just tell you like qualifying months. And then it will pop up a little note here after 3 qualifying months, and it'll tell you that the employee must be enrolled in the plan in the next pay period. So the nice thing about this is it already has the equation that we use already kind of just preloaded in here, and all you have to do is just put those hours in. So.
Okay, we have a question from Teresa. That you have a teacher who retired several years ago, not from your district, who is going to be teaching part-time this year. So now that each school, the member has to establish their eligibility in each individual school. So you just need to make sure that you're tracking their hours to see if they meet that hours threshold. And if they do, you enroll them. Otherwise, you don't have to worry about, whether this member has an account or not. Hopefully that will make sense.
Awesome. And we have a question from
Ladies.
Emily. If a brand new 23-24 teacher is asked to sub for summer school in summer of 2023 before their regular employment begins, and they have never worked for our school before, would we need to withhold NPERS for the summer services?
That depends on the hours of that intention of hours they are scheduled to work. So if it's the summer schools, do they consider it as a temporary work or do they consider it as a regular work? So these kind of questions, like situations, require a lot of questions and answers back and forth between school and the audit team. So maybe you should send us an email so we can kind of get the facts and circumstances sorted out so we can determine when she can start contributing. If they consider summer school job as a regular service, I believe that it should start, the school probably needs to start contributing to NPERS. But if it's a temporary work, she's not eligible yet. And maybe when she starts in the fall, they can, the contract start date. Okay, Cassie got something to add.
Well, I guess maybe my thing to add is that she is saying she's hired as a sub for the summer school. So if it's true substitute work for the summer school, like if she's filling in for a employee who is temporarily absent, that would be like substitute service and not eligible for retirement. So, if it's like actual substitute service, that would not count to retirement. And then when their regular employment begins, I would assume that they would have like a contract start date for their regular employment. So
Yes.
the start date for the, contracted work would be the start of their regular employment.
Okay, Cassie, if they have, if it's not included in their contract, then you just keep track of the hours. But if it is included in the contract, then if they're asking sub for the summer school, then you would do it. But if it's not included in their contract, they just have to track the hours.
Correct.
All right. From Shannon, we have an employee who is at the RMD age. Is there anything that I need to do to make sure the RMD is being made? And Jeremy's going to take this one, I believe.
Yeah, that's a good question. You know, the reason we kind of talk about the RMD, it's not down. Sorry. The reason we kind of talk about RMDs and that handout here is that there's not necessarily something you have to do. It's just when I don't know from your question if they are retiring, but you don't have to pay your RMDs until you're retired. So if you're like 95 years old, as long as you never stopped working, you don't have to worry about those RMDs. But if you do notice that they reach those RMD ages or they're getting there when they are retiring, then you know it just might be a good idea to inform them that they do have a pretty abbreviated timeline as to when they need to start applying for and getting that benefit so that they don't miss that date. So there's not necessarily anything you need to do to make sure of that, but you know, just reminding them, making sure that they're aware that that's something that is coming down the pike for them. And then, you know, turning in your non-cons and that sort of thing in a timely manner so that we can get to work quickly on their getting their benefit to them as well. So that's why we mentioned the RMDs. That's why it's good to be aware of those. But again, as long as they're working still after up to that and past that RMD age, they don't have to worry about that until they're done.
Awesome. Thank you, Jeremy. All right.
So I see there is a question about like a retention, well, she's saying recruitment and retention grant. And that's kind of one thing that we get asked about a lot, but that's really one of those situations where it depends is kind of the answer. You know, it depends on whether that would be for services rendered or not. And we have a whole bunch of schools kind of doing a whole bunch of different things. So it's really best to just kind of contact us and we'll, you know, ask you all the questions and we'll go ahead and do an analysis of it and let you know what we think. So.
Awesome. Thanks, Cassie. I think there's a question in the chat. Just a reminder, please put questions in the Q&A just so we all can see them. But question in the chat is, I have a person that has been a substitute. She is now also going to do some hourly tech labor for us. Her tech hours range between 12 and 18 hours a month. Do I need to add her to retirement?
Okay, there we go. Okay, so I'm just trying to scroll up to find the question really quick. But generally, okay, so she's been a substitute, and it sounds like she's doing possibly regular service. I guess it kind of goes down to what the hourly tech position is. If it's like, you know, if you consider it regular and ongoing and it does not, like absolutely does not fit into that like temporary bucket, you know, that would be regular service and you would add her hours that she works along with her substitute hours to monitor her eligibility for retirement.
No, there are a few questions being answered in the Q&A as we're talking. One, I'm just going to read them so that people who are following along can hear them. Does NPERS send anything to those near their RMD age? Jeremy said, Lori, we do send out RMD notifications as members approach their RMD age. So that is something that we do. A person said, employee terminated employment. How long do we have to watch the 8 days a month subbing if they decide to come back and sub? That is 180 days. Thank you for that, Sophia. 180 days they have for that 8 days a month subbing. On the new member enrollment slides, it says application for vesting credit. What is that? Sophia said that is for service credit hours. If someone worked in a different school, it can be submitted to get those service credits combined. And
I do think though you get that with your beneficiary form, I think, when you're a new member as well. In that new member packet, that vesting application for vesting credit.
all right, we do have a question from Trish. If we have, we're getting a few questions in. Thank you, guys. If we have a stay bonus for drivers that we pay in the summer and there are no hours associated with it, do we take out retirement?
Trish, I think that one would be another good one to kind of forward to us as a question. Go ahead and email that to us. So it's really just kind of going to go down to whether that is pay for services rendered and what they have to do for that pay. So if you just want to go ahead and send us that information, that would be great.
Thanks, Cassie. Someone said, can retirement plans from counties and state patrol, including years of service, be transferred to the school plan? Can school plans from Colorado, including years of service, be transferred to Nebraska?
Well, state and patrol, hello, this is Sophia, and state and patrol are separate plans from the school, so they cannot be combined. I am not 100% sure, but like school work from the outside of the state, they can submit some documentation for one of our teams. They actually verify, they can purchase service credit hours using that.
Yes, you can purchase up to 10 years of service credit for time you spent working for a public school system outside of the state of Nebraska or with Omaha Public Schools. So only public schools outside the state of Nebraska are OPS, but yes, they can purchase time for time they spent working for an out-of-state public school system. And we have a calculator on our website where you can see about how much it might cost to make that purchase.
Julie asked, so after the 180 days, they can sub all they want. And Sophia said that is correct. She said, make sure they sit out the 180 days. I just wanted to add, they still can sub those 8 days per calendar month.
Sorry, I missed that.
No, it's okay. I just wanted to add that in there. My dad is a retired teacher and he takes full advantage of those 8 days every month because he loves getting back in the classroom. Okay, so we have a couple questions coming in. So from Kathy, we have just from my own curiosity, when employees retire with an end date of May 20th, on average, when would you anticipate them starting to receive their benefit? And Jeremy has an answer for this one.
It takes about 3 calendar months from their effective date in order for them to start getting their benefit. So if their end date was May 20th and they had all of their paperwork in order to get your benefit, you have to do 3 things. You have to quit working, you have to have your completed paperwork returned to NPERS, and you have to establish an effective date. So they would have quit working on May 20th as long as they have their paperwork in and their effective date is established as of like June 1st, because your effective date is the first of the month following the rest of those things being met, then they would probably get their first check about 3 calendar months from June 1st. Their first check, though, would be for everything they should have received since June 1st. So that first check is going to be a very large one for about 3 to 4 months worth of payment. So.
Awesome. Thank you, Jeremy. We have another question from Dana saying, I have several new teachers starting in the fall that have worked in Nebraska. Is there anything specific I need to do? Do I still have them fill out the enrollment form and send it in?
Okay, so for starting contributions, if they meet eligibility, you would just start contributions right away for them. We do ask that you provide the beneficiary form and the vesting credit form, but whether we get that back to us, like whether our office gets that back, it doesn't really have anything to do with whether they should be enrolled or not. We have no enrollment forms, so if they meet mandatory eligibility, they would pretty much just start contributions right away. So.
Okay, get ready for this one. It's a long one. We use a time clock for all our employees to keep an accurate number of hours worked. They are frustrated with it as it's something extra to do every day. They're asking why we need to keep track of coaching hours if it doesn't really count towards extra years of service for all the extra hours worked as a coach.
Yeah, so we hear this all the time, especially from salaried employees who work over 1,000 hours per year, who already, like, you know, the limit to service credit is that 1,000 hours per year. But we always want to say, like, track hours and report hours, just kind of across the board. So for coaching, especially for those salaried workers, they put a lot of time in for the coaching, especially like, you know, early in the plan year, you'll have like the football coaches and volleyball coaches. And I know we just had a situation probably like 2 years ago where a volleyball coach passed away and wasn't, you know, reporting those hours. And her beneficiaries probably would have had another full year of service credit after you know, her death and when they were getting her, you know, death benefits. But since she wasn't, you know, keeping track of those hours, you know, we just they just didn't have that extra little bit of pay or service credit. So but just across the board, I mean, we're never going to say anything different. Just we, you know, ask that you track and report all those hours. Okay, so I see a question came in from Peggy. What kind of documentation did you say that we should have for a temporary employee? Well, for temporary employment, we would like, so I'm not a lawyer. We do see schools provide us like contracts with language that says temporary, but I'm not a lawyer, so I can't really like advise you like what to say in your contract. But also we'll get like like employer like assignment letters or some sort of like salary letter that will say like, okay, this is a temporary position and this is your start date and this is your end date. And that's kind of like what we really like to see is just something that says, okay, a start date and end date, and then just kind of, you know, that being less than 1 year. It really helps support that temporary employment. So.
We have a question from Megan. If an employee is placed on administrative leave, should that compensation be reported?
So the answer to this one is it depends. For the majority of cases, no. And then for the majority of cases, we're also going to have some more questions on whether how much of the contract has been completed, since if it's like a, you know, a teacher on administrative leave, if they're like a 9-month employee getting paid over 12 months, we're going to have to just follow up with some questions over how much of that, you know, contract was, you know, served, and we might have to adjust out some compensation. And then there have been like 1 or 2 cases where administrative leave has been reported, but those are really specific circumstances. So Megan, if you could just send us some more information. It's kind of a case by case. I know like some of these answers are just like case by case things, but
I think I've worked here for longer than everybody except for Sammy on this call, and I have. So it's been almost 3 years, and I literally can count on one finger the times I've asked a question and the answer was yes, or or like no, yes or no, and not just like, well, you know, asking for more information. That's just kind of how we work here. Unfortunately, I mean, just to keep the plan in line, that's how we have to do it. So, I see a question here from Lori that says for either Sammy or Jane. It says, since teachers do not work during the summer months normally, we will have numerous member records reported with 0 hours. Do we have to add a comment on every one of these member records with 0 hours? That is a tremendous amount of work. So I'll let Sammy or Jane hop on that one.
No, you do not. If you send me, or when I send you and ask you a question, you know, how many months are you going to be reporting 0? I put that in the record so you don't have to go through and mark on each one of those, because I wouldn't want to do that, so I don't expect other people do it. And we put it up in the org notes that, you know, your members are reporting 0 hours. And this is for the summer hours questions, the emails that I sent for those. Those are just for verification for the auditors and lawyer. I mean, I know we do it every year, but we still need verification for it every year. So that's why I send them out. It's not that you're doing it wrong or anything. You're actually doing it right. I just need to know And then I put it in the OR code. So when they go in and go, why are all these guys zeros? Then I tell them because they're summer months, they're on their summer break. So thank you for that.
Awesome. Thank you, Megan. So if a substitute covers a maternity leave at the beginning of one year, can they also cover one at the beginning of the next year?
Okay, I guess I'll take this one again. So yes, since they would be, we would consider those true substitute positions since they're covering for a regular employee who is temporarily absent. So I don't think anybody else has anything to add to that one.
I have another question here. When a substitute violates the 180-day service break and works more than 8 days a month, they have to start contributions again. Is there something else we need to do to get them to take a break, or is having them in the plan acceptable?
Well, I mean, part of our difficulties is that substitutes can't be in the plan. So what some schools have been doing is making some of these employees like kind of like a permanent substitute where they are, you know, kind of just required to come in and there's like kind of contracted to come in and fill in where needed. And that's kind of why we have been, last year, there was like a working group to come up with legislation to allow for unlimited substitute work. But since that bill hasn't been passed yet, we're still kind of just back to our 8-day of subbing for that 180 days. So yeah, I would say, I mean, you would pretty much have to continue substituting or continue contributing on that substitute work. But we would like for schools to kind of just keep to that 8 days a month.
All right, it doesn't seem like we're going to be getting any more questions. It's been a few minutes since we got our last one. So we're going to call it for the afternoon. But I do want to say thank you again for everyone for attending. We really appreciate you coming to this webinar, and we hope you have a great rest of your afternoon. Thank you so much.